So I'm not quite sure. Leaves me somewhat puzzled as well as to why they feel that making gold and silver at the same time, and platinum for that matter, would compromise their employees' safety.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And fortunately, it's that time of week again for the physical silver and gold market update. Andy Schectman, owner and founder, along with his father, David Schectman of Miles Franklin, on the other end of the line. And Andy, good to check in with you as always. How are you this week?
I'm good, Chris. It's good to be here. Looking forward to seeing you next week. Hope you're doing well also.
Well, we're finishing up packing here, and I guess I'm finishing up packing here, and gonna be headed to see a big metals fan in Oklahoma next week, and then on up to Minnesota. So it'd be fun to have some time driving, listen to some different podcasts, see what we can learn about the silver market. And to start off today, I have a question something I've been thinking about. Perhaps you could also give an update of the latest status at the U.S. Mint. And it's kind of weird, not at least from an outside perspective, easy to get a straight story of what's going on there. I contacted them once, didn't have much luck yet. Andy, we took a tour of the Denver Mint last year, where I believe a large portion of these coins are made. And aside from the tour, I mean, it was mostly machines doing the stuff. I mean, it wasn't like a sweltering room, there's like 500 guys piled in hot conditions. So it just hit me recently where they said, well, they're shutting down the mints, or they can only make this many coins because of COVID. And there's part of me that's thinking that didn't seem to make any sense based on what I saw, but you're the expert, so I'll let you take it from there.
Yeah, well, I mean, there hasn't really been any change at all, Chris. We've been told that these changes will be for the foreseeable future, as long as the next 18 months. Which leaves
like
me
the
wondering.
Fed, 0% interest rates for forever.
Yeah, well, it just doesn't really make sense, to be honest with you. You're right. It's not something that is like an assembly line where people are on top of each other. It's a few people working a few different machines and in different parts of the building. So I'm not quite sure. Leaves me somewhat puzzled as well as to why they feel that making gold and silver at the same time, and platinum for that matter, would compromise their employees' safety. As far as I can tell, that's not really true. But nonetheless, that is the answer we've been given, and just another reason to realize that in this case, you could argue, possession is moving up the scale in importance along with price, in the respect that, yes, you want to get the best price, but a bird in the hand is worth X in the bush when you have the major supply network in North America really mitigating supply tremendously into the foreseeable future. I think it is important for people who are trying to get some silver to secure it now, because the U.S. and the Canadian Mint have both really taken the same path and of restricting production under the guise of social distancing for COVID.
So what is the interaction like? And I know you think it was 1989 you started Miles Franklin, so I'm assuming you've had a fair amount of contact with them over the years, and maybe you could even touch on what the relationship is. I believe you're an authorized participant, and what that means, and if you ever, is it something where it's just like that political form answer, but or is there ever anyone that you talk to there that you get any idea of what may or may not really be happening?
We are a authorized reseller. Last I checked, there were 24 of us. You have to be nominated by one of the primary distributors. We had a very, very strong relationship with Prudential Base, who left the industry. They were one of the primary distributors over a decade ago, and when they left, that space in the primary distributor venue or arena left with them. In other words, they just left the industry. But about 10 years ago, they nominated us to be a primary or an authorized reseller. So what it basically means, Chris, is that we have the ability in very large volume to buy directly from the U.S. Mint. It means that we are recognized by the U.S. Mint as a vetted reseller of their product. You can only, the primary distributors can only nominate up to one company per year to be an authorized reseller. Since the Mint has been around since 1986 and there's only 24 of us, it's not something they do quite often. And I look at it as, one of the biggest achievements of our career, my career. The association with the Mint is very, very important. So I don't have day-to-day interaction with them, albeit I can, but I am involved in all of the communication in and out of the Mint, in terms of, for example, like the restriction of production. But, it's a situation where I think that you're going to have a very difficult time getting anything but gold and silver eagles out of the Mint for a very long time. And that includes fractional coins, that includes platinum coins. If people want to position themselves, I think it's never been more important right now to get some, because it's really not very easy to get anything other than gold eagles and gold buffaloes right now. Silver eagles to a lesser degree, and other than that, that's about it.
So what are the products that in regular conditions the Mint has, and what is currently unavailable?
They normally have platinum coins, 1/10, 1/4, 1/2, 1 ounce gold coins, American Eagles, 1 ounce gold buffaloes, and silver. They also make the 5 ounce the America the Beautiful. It's almost impossible to get anything right now other than 1 ounce gold buffaloes and 1 ounce gold eagles and 1 ounce silver eagles. But not in any predictable quantity. So I guess, look, the bottom line is simply this. Under normal conditions, we can get any of those products whenever we want. And right now, you can't get platinum eagles to save your life. The fractional gold eagles, if you can find them, they're trading at enormous premiums. 1/10 ounce gold eagles are trading at north of 20% over gold spot. That's as high as I've ever seen them. And so, the amount of product coming out is tremendously slowed down, and they're only really focusing on 1 ounce gold eagles and 1 ounce gold buffaloes. But here again, just a few weeks ago, I had someone who called me, wanted to buy 3,000 gold eagles in 6 Mint boxes, and I couldn't find a primary distributor who would take that order, because they had to be in sealed Mint boxes. And just goes to show how fragile and thinly traded the market really is. If I can't find a distributor to take a 3,000 ounce order in sealed Mint boxes because they're not sure when they'll be able to get that many, and they don't have that many on the floor, it should tell you just how tenuous supply really has been.
Well, I hear you, and if you talk to him this week, or maybe I'll be up there, and it can put me on the phones. I can see what I can find out. In fact, if you find anyone there that we could bring on the show, that would be fantastic. Because it was funny when we went on the Denver tour. I mean, there's a bunch of people up in the tour area, which was sealed off through a solid glass window, but you can overlook the production facility. And at one point, the guy who's giving the tour, he says they mint 17 million coins per day, and I believe that was just Denver. I'm thinking, gee, that's, or no, it was the 30 million coins per day. It was 17 million pennies, and I'm doing some quick math in my head. I'm like, well, 17 million pennies alone, that's $170,000 a day, let alone the quarters, dimes, and nickels. And I asked the guy, I'm saying, isn't that kind of inflationary? And Andy, would you like to take a guess at his answer?
What's that?
He actually looked at everybody with a straight face, and he said, well, you know, sometimes people lose change, or they bury it in the backyard, or it's in their piggy banks. And I'm like, come on, man. Although it gets better, because he said, actually, they mint the coins. The Fed buys them, which means they print money to buy the coins, and then any profit that's left over goes to the Treasury. So it seems like quite a three-card Monte arrangement they have going on there. And so anyway, if we can, I guess this isn't going to help get one of their representatives on the phone. They clearly were having enough of me after a little while there. But hopefully we can find someone next week.
Well, they don't do any of the precious metals minting at the Denver Mint any longer. I believe just about all of it's done at the West Point Mint in New York. This last year, when production on Silver Eagles was hampered, they moved some of it over to the Philadelphia Mint. But in general, the precious metals are minted in West Point, New York, which is up near Buffalo. And you would think that would be a logical extrapolation, that with, you know, social distancing put in place at West Point, maybe they should just open up the Philadelphia or the Denver or the San Francisco Mint and produce some more there to ease the strain. But no, that's not the case. So, which lends people to believe, are they trying to inhibit supply to the public? I don't know. It's all very strange to me, Chris. It doesn't make sense whatsoever. You would think that when there's such massive demand, that one of the few money-making divisions of the U.S. government would be more than willing to work overtime to get their product pumped out to the American people.
Well, that's typical government for you, to get every possible business condition backwards. So I guess that's how it goes. But yeah, it's similar to how we saw some of these Wall Street banks pulling out of the gold and silver markets right as there's customer order flow and interest heating up, which seems a little contrary to the normal pattern. Speaking of Wall Street, Andy, I don't know if you happen to catch any of Jerome Powell's presser on Thursday, where it's amazing for all of the media coverage, and I'm partly guilty of that as well. The guy actually said nothing while saying that they're going to print a lot more money, inflation targeting. I wonder if there's some guy they hire just like who comes up with phrases like headwinds and quantitative easing and inflation targeting, which apparently they're just going to say that the inflation target isn't high enough and raise it. So if you have any thoughts on that one.
Well, yeah, what can he say? It's the same reason they use chips in Las Vegas, because if you really had dollar bills and thought about it for a minute, how much you were spending, you'd probably be less apt to gamble as much. And the same thing here. If they actually just spoke in straightforward terminology, people would freak out. The bottom line is that they're saying that they're going to let inflation run at a period of time when real interest rates are negative, when inflation is factored into it. And so that's a bad situation because, that spells big trouble for the bond market. And with inflation and real negative interest rates, there's no incentive to buy fixed income any longer, which is just another reason to buy precious metals. And so I think it's tremendously bullish for gold and silver. And, once they run down this path publicly, which is a path we've always known they would take, and inflate or die, they always choose the easier of the two, the inflationary path. It brings us down a very frightening road, because where it leads to ultimately is much higher inflation, much higher interest rates, and a crashing economy. And just how fast we get there, I guess, is yet to be determined. But I think that this is a path we knew they would take, and now they're openly admitting it. So it's I think people need to really stop for a moment and think of what that means when they talk about letting inflation run. They're talking the core CPI deflator, which takes out a lot of the important things like food and energy, I believe. And what that basically means is yeah, right. Well, they're targeting an inflation rate of probably real inflation of about 6, 7, 8%. And with interest rates on the 10-year Treasury, it's 0.6%. And now you throw in inflation, that brings us down a very dark road, one that, leads to very few alternatives where to safely put your money at a period of time when the stock market is as overvalued as it's ever been, and 50 million people unemployed. So now you just put an exclamation point on the bond market being an unsafe place to be. So I don't know. I think it just underscores and puts an exclamation point upon the necessity and importance of owning some gold and silver, Chris.
Well, speaking of inflation targeting and rigged inflation metrics, did you catch that David Morgan in a couple interviews a week or two ago was pointing out that if you use John Williams' inflation number, and just to put that in context for people who may not be familiar, there's a guy named John Williams who has shadow stats, but this isn't what he thinks inflation should be. This is just using the old formulas before the government changed them to always make the numbers look smaller. He said that the equivalent of $50 silver in 1980 would be $600 silver right now, which I'm guessing would make a few silver investors happy. Although, fortunately, Andy, I have several pieces of good news to share with you and our audience today. First is that we may have a documentary filmmaker joining us in the Silver Vault at SilverFest. Jimmy Morrison, he actually made a great Sound Money documentary, had Peter Schiff, Ron Paul, a whole bunch of other folks in there, and he was excited about our party. Although, interestingly, one of the things that Jimmy does as a part-time job is he, I don't know what the title you would call it, but basically he goes around and he checks the prices of things at different stores, either like Walmart or Target. And I've been thinking that would be nice to get, maybe it'll be informal, but I mean, just if you measure some of the stuff, that people actually use, like I've thought of the slice of a price index. I mean, I remember when I was in grade school in the 80s, slice was $1, and if you can find one for less than $3 now. So, I mean, the idea that they say there's 2% inflation is obviously silly. And additionally, I remember wondering when the Fed went to unlimited QE back in March, if we would actually start to notice things becoming more expensive. I didn't see it then, but I feel like it's starting to become a little bit more noticeable to me. I'm going to start putting some numbers on that, but I'm curious, have you started noticing in recent times or at any point in this year the prices of consumer goods going up as well?
Yeah, well, first of all, if you look at what happened in the last time there was a bailout, all that money went into Wall Street banks and asset prices were inflated, stocks and bonds, and to a lesser degree real estate. Well, this time, you've had trillions of dollars poured into M1 and M2 into the money supply through the CARE package and PPP and all the money that the Fed has poured out and the government has poured out to the public, right, wrong, or indifferent. And so, coupled with the fact that you have less productivity, people are being paid to stay at home and being unproductive. I've noticed something more so than rising prices. I've noticed shelves are empty. I went to the PGA Superstore here in Minneapolis a week or two ago, and it was unbelievable to me how much product was gone and how many of the shelves were bare. And it's like you have less stuff being produced and or imported because people aren't working, and the countries are like China, they're not exporting as much to us, and so there's less stuff. Arguably, there's more money, a la the inflation rising. There's your stagflation, an economy with little or no growth, and rising prices. And so I think you're going to see that 70s style stagflation. We've been talking about that for a while, and this is something that people in this country haven't seen for a very long time, and I think we'll see it now because the money is actually being poured into the real economy instead of into inflating asset prices. And so when you couple the fact that this time around you may see a lot of people pull out of these inflated asset prices out of fear and come into the real economy, and then comes your hyper stagflation, when people are pulling out of these hugely inflated asset prices in search of tangibles, in search of goods, in an environment where people are being less productive. So you have more money chasing fewer goods and services, and that's a scary recipe when you realize that the kerosene that will be poured on that will be fear-induced market sell-offs. And if you see that, very quickly you see the hyper-stagflation take over from just the stagflation. So, yeah, I'm seeing more than rising prices, Chris. I'm seeing supply falling, and I think that's, to me, been more noticeable. Maybe it's just because I don't do a whole lot of shopping, but I do think you will see rising prices, and I also think you'll see less stuff. Not a good combination.
I mean, and then it's truly incredible that in that recipe you mix in that somehow, based on everything you just said, Jerome Powell and the Fed claim that there's this great CNBC article where it said, they actually, I think it was Jeff Cox, he actually wrote, those people think it seems a little bizarre that the Fed would want prices to go up more, but economists and central bankers see it differently. I mean, which perhaps raises a point I guess is often on people's minds. At this point, based on everything you've seen in your lifetime and business and just watching these markets, do you believe this is really like a bunch of confused Keynesians who are like, well, in my Wharton textbook, Jeremy Siegel said, when the economy is weak, print up a batch of hundreds, and they're just, or do you think this is on some level pretty darn intentional? They know what they are doing. They know how they're impacting people's lives, but they're stealing and they don't care. Kind of like you see, sometimes I remember Goodfellas or The Godfather, and I picture central banks or governments, and I find when I think of it like that, all of a sudden, at least the world starts to make a little more sense to me. I'm curious if you have any thoughts to share there.
Like any Ponzi scheme, I don't think they started out that way. I just think they've gotten so far down the rabbit hole that, when Nixon closed the gold window, everything changed. And they realized that, hey, geez, well, we can just print money for stuff. And the whole game changed then. And I think that they didn't start out this way, but there's a part of me that believes they realize they're far enough down the rabbit hole that they're just trying to squeeze as much out of the system as they possibly can at this point. People's lives be damned. That's not what they're concerned about any longer. And so, yeah, I think they know what they're doing. I don't think originally, they intended to do this, going back to Bretton Woods, 1944, but I think when we left the gold standard and the politicians realized that we can just print without any governor, we started going down a path that, as Franz Pick said, all currencies inherently are meant to die. If you have a currency that has no tie to gold, no tie to putting a governor on the printing press, all currencies will go to the same place, intrinsically zero. So that's where we're heading, and the actions that they are taking are only hastening the arrival at that juncture of worthlessness. So, yeah, I don't think it started out diabolically, but we're certainly I think heading that way out of loss of options, Chris.
Well, Andy, I'm curious. You've been doing this for 30 years. I'm sure you've had some wild conversations and heard some whoppers in your day. So I'm curious, based on all of that, what do you think is the real deal with Fort Knox?
I don't know. It just seems like if it were such a big deal that they would audit it and let it be openly audited, and Ron Paul's efforts to audit it wouldn't be thwarted or shot down. It hasn't been audited since 1956, I think, or 53. Why? What's the point? The conspiratorial side of me says that's what they use to suppress the price and hold it down by forward selling all of that into the market. I don't know. I guess I would say, if I had to really guess, I'd say the gold's not there, because if it were, they would openly audit it. It belongs to the American people. Why are they so afraid to let an independent auditor in there? And so, I guess if it walks like a duck and talks like a duck, probably is one. Probably not there, Chris.
And for comparison, I know you have some storage options that you offer at Miles Franklin, and I think it'd be interesting to contrast, because whether it's the times you and I have talked about it, or similar with Andrew McGuire, who runs Kinesis, I've mentioned to him, I think his marketing campaign, it's not as much why gold and silver, but basically that you're not doing what GLD and SLV are doing. So to me, if I were, I'll speak for myself, if I were offering storage, having a transparent audit would be the selling point, which, like you said, it's like you should be happy. And if obviously the government, that's the problem with government. They don't actually have customers, but if you're doing business with someone and you're doing honest business and they're worried about something, isn't that how most businesses, and you can speak for yourself as well, would that would be the point, to reassure your customers? Yet we don't get that.
Of course, it's just indicting of their actions are an indictment, I think, in and of themselves. Of course, and transparency and honesty is the foundation of any relationship and a successful business. So yeah, I think, and that's the whole point of it. When it comes to third-party storage, yeah, it's the segregation and the allocation and the third-party auditing that gives it legitimacy, and the transparency of it. That's the whole idea, and I think that's which would segue me into saying, we've often talked about the Tier 1 reclassification of gold. I've made a point of talking about that on every podcast because I think it is the most significant event of my career. But if they are trying to blow up the dollar and use the new Tier 1 status of gold to have some sort of a tie to the price of gold, it's probably similar to what, prior to 1971, where it's not convertible to the public, but a small portion of it tied to the dollar to give it credibility. Here's where I think you'd see transparency and technology. They would use, in my opinion, because of all of this, what we're saying, they would use a distributed ledger to, I think, to validate the gold supposedly backing the new U.S. dollar. If I had to guess, that's the end game here, is that you reclassify gold as a Tier 1 asset, and then, which, by the way, if you Google that, it's considered a riskless asset, and then you peg it to a new dollar and use a distributed ledger, which immutably will show the where the gold is and how much of it is there, and et cetera, on a distributed ledger, for these reasons, because trustworthiness and openness and transparency is lacking. And if you ever want legitimacy in anything, whether it be in our gold holdings at Fort Knox or a new attempt at a new world reserve currency, I believe you're going to have something like that, distributed ledger showing exactly what is backing the new currency. So that, to me, has always been the end game with all of this.
Andy, well, we'll check with Marketing Director Yara and see if we can get the Schectman for Fed Chairman, Schectman for Treasury, Schectman for Head of Fort Knox, if only someone with actual business experience and desire to do honest transactions with their clients. We're in charge of all this stuff. Although until then, fortunately, I hear a little rumor going around the market that you have another super hot special for our listeners this week. And what do you got there, buddy?
Bags of pre-65 dimes, quarters, and half dollars. I have an awful lot of it in stock, north of 100 bags. We've really been scouring the planet trying to get as much as we possibly can, as I've been saying, into the fall. We have dimes and quarters at $3.29 over, and half dollars at $3.69 over spot per ounce. And I think you'll find that's as good of a price as you'll find anywhere in the country. So $3.29 per ounce over on dimes and quarters, pre-65, $3.69 over on pre-65 half dollars.
I like it. And do I count in this one too?
Yes, you do. Absolutely.
Can you mark me? And I'm not doing this to be like funny or cute on the show. I'm darn serious. Can you lock me in for $1,000 worth of those Kennedy half dollars? Oh, and just think about how fantastic that'll be to give them away at SilverFest, where, if I recall correctly, we have our conference about silver, where I don't believe there's more than 2 consecutive hours where we're not giving some silver away. So if you can mark that down, set it aside for me. I'll see you probably, might be Wednesday or Thursday before I get there. But, yeah, so I'll take that. And for whatever is remaining, Arcadia at Miles Franklin, .com, and that's where you can email Yara, who will help with orders on junk silver or anything else. And Andy, fascinating times, but only 2 more weeks till SilverFest. It's going to be quite spectacular. Your buddy Bill Holter just got on board, so we'll be doing an Ask the Expert hour together with you and Bill. So it's going to be fun, and I'll be looking forward to seeing you next week.
I will be looking forward to seeing you as well, Chris. You have safe travels, and look forward to chatting next week.
All right. And folks at home, if you would like to know what Eric Sprott thought of this whole arrangement in the metals markets and what he felt about the CFTC, Andy, you really, if I may, before we wrap up, check out last night's video, Friday night, Eric Sprott calling the CFTC a loser organization. And again, I don't like to say things like that lightly, but certainly, when you watch money get stolen, look the other way and essentially condone it. Anyway, you can hear what Eric had to say coming up right now.